Hong. Let's talk about something that has been very hot topic lately, glove stock. Now, in particularly Top Glove and Hartalega. Because of COVID-19, the business has been good and the share price of these two glove companies have shot up to an all-time high. Now, both Top Glove and Hartalega are now in the top 5 in Bursa Malaysia in terms of the market cap. So, congrats to all my friends out there who have invested in a glove stock and profited. And in fact, a colleague of mine have made over 200% of capital gain in less than a year. And this one is a real case. And for those who miss out, you just close one eye. Now, I have a lot of friends and students who actually came to me and asked me and said, hey, Shen Hong, right now, the share price of the glove, will it continue to shoot up? Or is this the highest it can go and will it start to dip soon? Now, here's the thing. I cannot predict the future, but what we can do is to look at the fundamental of these companies all the way from the perspective of value investing and understand the industry, the business model, the financial performance, as well as the growth potential and so on. So when the stock price are going crazy and the emotions are running high, and take a deep breath first, don't panic. Take a step back, approach it rationally, understand the true value of the company. And a lot of people feel very wasted and rugi for not buying the glove stock earlier. Now, what I want to say is, as long as the market is still there will always be the investment opportunities. So don't let emotion influence your investment decision. So come, let's analyze the situation. Why and how did the glove stocks surge so high? Now, COVID-19 has been around for more than half a year and the global demand for the glove is growing strong at a rate of 8 to 10% per annum. Now, if we look at the US, the situation of this pandemic still doesn't look very good with the daily cases still in a 5-digit range. And this created a panic in the market which led the glove stock to rise. And looking at Malaysia, even though the COVID-19 situation is under control right now that we are in a recovery period, but people are still worried that we might have a second wave of outbreak. A vaccine hasn't been developed yet either, and it may take some time for this virus to go away for good. Now, with that, we can safely say that global demand for the gloves will continue to be strong. And also, during MCO and CMCO period, the rubber glove manufacturer could only operate at 50% of the workforce. And this affected the production line and a delayed delivery time, and resulting in a short supply of rubber glove. And that combined with the sudden surge of demand, the average selling price of the glove ASP was increased. On the other hand, the price of crude oil took a dip and the demand for the main raw material for rubber and nitrile gloves slowed down, and which lowered the cost of raw material for gloves. And with all these factors taken into account, this widened the profit margin, which increased the entire profitability of this glove company. And according to the prediction of Malaysian Rubber Glove Manufacturer Association, or what we call MAGMA, the global demand for the medical gloves this year is expected to reach 330 billion pieces. And with Malaysia as the world's largest glove exporter, we are expected to export nearly 225 billion gloves and supplying to 190 countries worldwide. And that accounts for more than 65% of the global demand. And compared to the 170 billion glove exported last year, there is a 32% increase. And the demand for gloves in the international market has also slowly shifted from rubber to nitrile glove. Now, Malaysia, as a major exporter of nitrile glove, has a great competitive advantage. So, from a fundamental point of view, the glove market is definitely very solid. And the sales and the profit growth of this glove company in immediate future definitely look very promising. So the next question is, should you still buy glove stock? And currently, the P/E ratio for glove stock are averaging at around 120, which means they are overvalued. And will the share price continue to rise? That's not impossible either. But the most important question is, are you able to identify quality stock to invest in at the right time to buy or sell? And if you are serious about learning the right method that will give you consistent result, I have a free online webinar where I will be sharing a proven 3R methodology that I myself and many others use, and we can already see now is a golden opportunity. So start by investing in yourself first, because you will benefit from it for years to come. And click on the register button right now, and I will see you in the workshop. Bye bye.